The attractions of the UK market. Well, I think quite a lot of people, when you talk to them about UK equities, their initial response is it's a mature market, it's a proxy for the UK economy, it's fairly dull. If I'm going to have equities, I'd like to have some emerging market or some Asia or even some frontier, perhaps, if they're feeling particularly brave at the time. But I think if I just say to you, look, over the last 5 years, on a total return basis, the FTSE All Share, so the main index in the UK, has returned 74% over 5 years. I think that's pretty attractive level of returns. As it happens, Shire's Income's delivered 115%, so it's beaten its benchmark. Again, but those are not the returns commensurate with a dull, boring, mature market. And part of the reason for that is because only 24% of the revenues of the UK market are derived domestically. So 3/4 of the revenues of the market are coming from overseas. Why do we have so many well-developed international businesses? Well, in part, that's a function of small landmass and history and empire, frankly, that forced companies to go and operate overseas. So we have a longevity of experience of operating overseas. So you have this international pool of revenues. And if I say to you, well, from a corporate governance perspective or a legal strictures perspective, you are in effect a minority shareholder. That's what you are when you invest in one of these businesses. And if you invest in a UK company, you're protected by UK law and the shareholder rights are enshrined in UK law. And if you invest in some of these overseas businesses, you're subject to the vagaries of some international interpretations of law. I think that's very important, that because the company can be doing very well, but the gains made by the company don't often necessarily translate themselves into gains for the shareholder unless there are protections in place to make sure the shareholders benefit from the gains that everybody's making in the company. So UK law is also an attractive feature of the UK market. And then one also has to consider valuations. A lot of people have looked at emerging markets and then not really made very much money because although there's been a lot of growth in GDP and a lot of growth in profits, the multiples that they paid to buy those shares were too high in the first place. If we look at the UK market today, 13 times, maybe 14 times price earnings multiple, that's reasonably attractive relative to history. It's definitely attractive relative to most other international equity markets. If we look at the yields available, I said we get 4.9% yield on Shire's Income. German 10-year bonds are yielding less than 1% for the first time in history. In the UK, 10-year gilts are give or take 2.5%. You may or may not think that's an attractive proposition, but I think the 4.9% on Shires is rather more attractive without some of the duration risks. So a combination of the quality of the investment opportunity available, the protections, and the valuations, I think all serve to make the UK quite attractive.